Guys, welcome back to the Independent Investor Channel. My name is Ryan. I wanted to roll out 5 stock picks that you can buy in volatile markets. Honestly, I scoured all 507 companies in the S&P 500 and was only able to find 5. Not just kidding. These are actually 5 that I'm going to be looking to take positions in this week, actually, really irregardless of what the stock market does. Wanted to roll them out to you guys, and there's going to be some picks in here that you probably recognize. There might be some stuff in here that you may not have thought of as well. Always trying to turn out value to you guys in a 5 or 6 minute video here, rolling out 5 stock picks for you guys. If you're kind of confused on the landscape about maybe what to dabble in, or what, if you even have the opportunity to add some cornerstones in your portfolio right now, you certainly want to be on the prowl for opportunities as the stock market does adjust back. We're currently trading at a valuation at around 15 times forward earnings on the S&P 500. So certainly can provide you an entry point, not to guarantee that the stock market's not going to go down or up. Okay, I don't forecast those things, nor do I think it's possible, but certainly want to take advantage of the dips when they're provided. In a bull market, in a correction in a bull market, you're typically not provided very long to think about your entry points, all right? So you have to make strong moves in the stock market. And I think the first stock that you can make a strong move on right here is Boeing. Boeing is, I've got a couple industrials in the group here, and industrials have just taken a bath. They really have. Boeing was one of the very few bright spots with their report. Forecast a long-term growth of 14%. Just about half of their business is done international. They are the premier airplane manufacturer in the industrial sector. A $200 billion market cap, so certainly can fit into a portfolio long term. It's got a fairly decent dividend. A lot of these large industrial companies like Boeing and the other one that I'm going to mention to you guys have nominal dividends. They are rising and they are forecasted to rise. But at 2%, at least you're going to get a clip, of a dividend that's going to pay you over time to own this fine company. But you're also going to have a really good chance of some capital appreciation, as Boeing has kind of started to come back a little bit, but finding some really, really good support here on the charts in accordance with what I'm looking at 360. So off of its highs of the year, I think Boeing definitely is interesting enough to look at here. The other industrial that I'll roll out to you guys is FedEx, and FedEx is traded under the ticker symbol of FDX. Another one, but by nature of the charts, is showing some really good support here at around 240. Couple really interesting things about FedEx is their acquisition, growing their international business with an acquisition that they've just currently had. FedEx has a little bit lighter of a market cap that I'd like to recommend to you guys at $66 billion. No small potatoes, but honestly not quite as big as a Boeing or some of the other industrial plays out there. But at 12 times forward earnings, man, it's taken a bath just like everything else. FedEx had a couple nice quarters strung along, and I think this one really got watered down in the fact that it's just got caught up in all this market turmoil that's going on right now. But if you've ever been looking, PEGI ratio is at about 1.1 times, and at 12 times, it will pay you a small 1% dividend, so not a whole lot there. But FedEx is just one of those quality companies that you can put in the portfolio to take up what I recommend to be a 10% allocation in the industrial sector. All right, the next one is really going to be interesting for you guys, and this is going to be Estee Lauder. Estee Lauder is one of those really interesting picks, probably the most coin for growth in the consumer staples sector. Strong buys across the board. This is a really, really heavily covered stock. And basically what it came down to me, what caught my attention in Estee Lauder, they will be reporting this week. So it will be one of the top 3 companies that I look at reporting this week, but their margin expansion is really where it's at with these guys. And at $50 billion, it's a good exposure to consumer staples. Unfortunately, it does trade at a fairly rich valuation, but these folks are best in breed. These are one of the very biggest companies, been around since 1946, forecasted to raise their dividend, pays again kind of a nominal dividend here of 1%, but we're looking to roll out stock picks that you could take a position on amidst all the volatility that's going in the stock market. And Estee Lauder, traded under the ticker symbol of EL, will get it done for you guys. Second to last here, this is an obvious loan shark in the technology sector, and that is Intel. Intel is the largest chip maker in the world. Intel at $44, you're getting a fantastic value on a $204 billion company, traded under the ticker symbol INTC. You are looking at a company here that is trading at 9.6 times forward earnings, guys, and that is all I will say about that. You don't need to know squat about the stock market to look at my face and realize how cheap Intel is trading right now, and actually just came off a phenomenal quarter. And for a dividend aristocrat basically in your portfolio that's going to pay a 2.7% dividend for you, it's a really good cornerstone in the technology sector. You could pick up some shares of Intel right here. Almost an attractive PEGI, not quite there at 1.2 times, but really, really interesting. 79% of their business is international, man. So they are a global company. They are huge, and they can take up that cornerstone in the portfolio. And finally, we're going to get a little bit of growth in the portfolio here. I've liked this company for a long time, and it is the largest coffee maker in the world, and that is Starbucks. Starbucks is our great American company. 1/3 of their business is actually overseas. We've got rising income leaderboard here on the data that I look at 70 billion. You are going to grab a nice healthy dividend at 2.5%, guys. If you've ever wanted to jump into Starbucks, the valuation is actually adjusted back to something a little bit more acceptable when compared across its sector at 21 times forward earnings, expected to rise the dividend over time. But Starbucks, you could get some growth and appreciation out of it, as well as rake in a pretty healthy dividend on Starbucks, traded under the ticker symbol SBUX. Guys, thank you so much for tuning in to this 5 stock picks that you can buy amidst all the volatility, all right? If it's your first time tuning in to these quick shot videos that I roll out for stock picks for you guys, man, subscribe to the channel. Help us support the message that we're putting out for new investors, guys. Leave your comments at the bottom here and share the message with anybody out there that you know that can benefit from the information, man. We're always looking to empower and get folks started off on the right foot, guys. Thank you so much for tuning in, and good luck in your investment future.